Are you tired of overpaying for your gold, silver, and platinum bullion coins and bars? Then visit sdbullion.com today. SD Bullion was recently named the 177th fastest growing company in the United States by Inc. magazine. This is because they offer the absolute lowest prices in the industry and follow up with over-the-top customer service. So what are you waiting for? Go to sdbullion.com today and join more than 60,000 happy investors that save money on every precious metals purchase they make.
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and back with us today is Steve St. Angelo from the SRSRockoReport.com. Steve, thank you so much for joining us today.
Yeah, it's great to be here, Elijah. A lot of interesting things to talk about.
Definitely. Now, the first topic I'd like to discuss is silver. You recently posted a video where you're explaining why the silver chart right now looks the most bullish that you've really ever seen it in years or even decades, possibly.
Yeah, and unfortunately today, the silver investment, silver traders it's off the radar. There's a lot of negative, let's say, sentiment about silver. So when you come up and you say, well, silver has the best setup I've seen in years, people are going to say, well, that's just, who cares? But, when you start looking at fundamentals, over the past, let's say, at least decade, the low that I saw for the net commercial short positions, and again, these are the commercial banks, JP Morgan, HSBC, Scotia Makata, the large bullion banks. The lowest I've seen their short position was about 10, 15,000. And it just fell this last week down to 3,700. So it's below the 15, 20,000 low level that we've seen for years. So, and what's interesting, the week before, the speculators have been always long. The specs, the trading specs have always been long, but they went short. And the last time we saw a huge spike in the traders, the spec traders going short was in 97. And after that happened, we had a huge surge in the price of silver. So when the net short positions in silver get to this low number, we could actually see where the commercials are become net long. So it could go the other way. But at this point in time, silver is setting up to be at the best level it's been in years. Now, if we compare that to gold on the COT report, gold, their net commercial short positions are like about 75,000. That's their low. Well, the last week they were at 167, not quite 100,000 more than their low. But gold is not as a better setup as silver is. And then I had this one other chart that I published looking at the silver price over the past 2 years. And when silver was trading at 18.5 in March, actually it was May in 2017, the commercials had 112,000 net short contracts. And then it fell down to 40 when the price of silver fell down to $14, $14.50. And then it shot back up to $18 in September. Then we had 77,000. So we see the fluctuation in the price, the commercials add and then liquidate. Well, we went from 77,000 net short positions at $18 in September 2017 to 16.5 now dollars at 3,700 contracts. So when you look at this setup, silver is set up to really move up when the markets start to correct, and that's how I see it.
In mentioning about the markets correcting, you came on my show about a month ago, and you were saying that the stock market correction is not over. Actually, we're going to see a crash ahead, which will eventually take the Dow down to 3,000, which I think is a very bold prediction. your next target for the Dow is 19,000. Why is that?
Well, it's the 50-month moving average. When you look at the long term, let's say 20 or 30-year chart, that's the 50-month moving average. And now we saw the Dow Jones very little volatility in 2017 and in the beginning of 2018, and the Dow got up to 26,600. And then in a very short period of time, 2 weeks, it fell down to 2,350, almost 3,000 points. Then it moved back up. So if you look at the weekly chart now, you're going to see that the stock market fell off. Then we had a movement higher, and it's been going up and down. Now, it's very volatile. We have huge moves up and we have huge moves down, and that's what we're seeing. When you see that kind of extreme volatility in the market, it's similar to someone who's very sick and their vital signs, when they go to the emergency room, their vital signs are they're bouncing all over the place. And so this volatility that we're seeing, these huge moves up in certain days and then huge move down, it's a precursor to when the market starts to fall off. And as I mentioned during that interview, back in 2007 and 8, the Dow Jones took a year and a quarter before it really started to fall off. And it didn't bottom until 2009. So people can't look at what's happening in the markets on a daily basis. They have to look at what's going to happen to the markets over the next year or two. I see the market, the Dow Jones, the whole entire market, falling considerably, 50% or more over the next year. And when that happens, Elijah, that is going to be very bullish for people owning gold and silver, because there just aren't many assets to protect wealth when these markets start rolling over, as well as real estate prices falling.
Now, with all of this, on the table, you're saying the charts in silver look very bullish and also with the, commercial net short positions extremely low. And then also with the stock market seeming to be ready to tank. Where does this put silver in a year or two?
I stopped doing price targets years ago because there's so many people out there who put price targets and they just don't work. The best thing I can look at is what is overvalued: the stock market, the bond market, and the real estate market. They're extremely overvalued. What is undervalued? Well, you look at something that's undervalued if it's close to its cost of production. Silver is very close to its cost of production, which is $15, $16. Gold's a little higher, which is probably why their commercial short positions are higher, because it's trading at 13, 20, and it's let's say break even is between $1,150 and $1,200. So there's a little more profit right now in gold. But the thing is, both of them are still way off their lows. Gold trading at $1,300 is considerably off of its peak of $1,900 in 2011, and silver trading at $16 is considerably off its peak of $48 in 2011. But you see, the Dow Jones is only about 8% below its peak. And one last thing we have to remember, people keep saying this: well, if the stock market's going to crash, well, why won't the precious metals go down with it? Well, because in 2008, everything went up together and everything came down together. If gold was trading at 2,000, silver was trading at 30, 35, 40, and the market started correcting, yes, then we could see a correction in the gold and silver price. But we already had that correction in 2013, 14, 15, and 16. And even though the silver and gold are above their lows, they're still very close to the lows. And we're also seeing this in the COT report. So what does the silver price do when the markets really start to correct? It's anyone's guess. But the thing is, that is the best asset to own to protect wealth: gold and silver seems to be setting up to be even better than gold.
Now, I know you won't give us a specific price target, and really, at the end of the day, a specific price target isn't very helpful, right? Because we might see gold and silver go up by tenfold or whatever, but if the dollar goes down, the real value of it hasn't gone up that much. So, if we went into a hyperinflation, gold and silver could go who knows where, but really what the purchasing power of gold and silver is really what's important. So maybe if you could give us some insight on that, what do you see, for example, if we took the Dow gold ratio, where do you see that going in the future?
Well, I haven't looked at the Dow gold or Dow silver ratio, and I imagine they're close to their peaks. But let me put it this way: as I mentioned, in 2007-8, we had a crash of the system. But in 2007, the U.S. energy industry was in relatively good shape. It didn't have a lot of debt. Unfortunately, today, along with the huge leverage in the markets and the massive amount of debt that's now on corporate balance sheets as well as the public balance sheets, the energy industry, especially the U.S. energy industry, is in serious trouble. So when we realize that everyone's focused on finance, everyone's focused on the housing market, let's say the stock markets, they're focused on the dollar. Well, without energy, all that's rubbish. Without energy, nothing works. And so when you look at the energy and how the energy is going to start to fall apart, then the store of value is not in a 401k. It's not in a pension plan. It's not in a stock. It's not in a regular IRA. It's not in a CD. It's not in real estate. So in terms of what would happen with gold and silver compared to everything else, I really think, Elijah, we could see extremely high valuations because, again, the market for the last 40, 50 years has been funneled into stocks, bonds, and real estate. It is only 1% of the market or less. I think for silver, it's 0.5%. If just 1% of the market goes into gold and silver, we're talking a few $1 trillion. I mean, that will push their prices up, let's say 2, 3, 5 times. And maybe silver even more because there's really, if we look at the above ground investable amount of gold and we look at the above ground investable amount of silver, I think it's 2.5 billion ounces of silver and about 2.3 billion ounces of gold. So there's really not a lot of silver that investors can get their hands on. And so the best way I could answer you, I can't give you a number, but once the markets really start to correct and as the energy system starts to disintegrate, we're going to see extreme valuations of precious metals because unfortunately, there aren't many other good assets out there to protect wealth. And in the future, people are going to move from acquiring wealth and growing wealth. This wise thing to do now is to start protecting wealth. And the best way to protect wealth is in 2,000 years of gold and silver, which have performed as store of values.
Now, it's not just the stock market that you see crashing in the future. You recently also talked about the real estate market and how you think the real estate market could also be in for a huge crash. We're seeing housing prices, median home prices are above their 2007 highs, and you're seeing a huge crash coming, possibly a 90% reduction in price.
Yeah, when I say 90%, that doesn't happen in a week or a month or a year. That will likely take a decade. And the reason for that is how I see U.S. shale oil production collapsing. I believe within the next, let's say, 7 to 10 years, U.S. shale oil production will collapse. Today, we're producing about 10.4 million barrels a day, and 6 plus is shale. I see U.S. oil production falling below 4 or 3 million barrels a day by 2028, and possibly sooner. So how do you run Dallas, L.A., how do you run New York, Chicago on 50 or 75% less of fuel? Can you imagine that much less traffic? What does that do to economic activity? What does that do to the businesses? And what does that do to real estate values? That's the reason why I see a crash in real estate values. It all has to do with the energy. And you're right. the median home prices back in 2007 were about 250,000. Now they're 324,000, 30% higher. And if you look on TV, watch any of the flipping shows, the home flipping shows, the renovation shows, and you see these people that they look at a home and there's the list price. When they go to purchase it, if it was 275, they're purchasing it for 283. It's always 8 or 9 times out of 10, it's always higher. That means there's a bidding war on real estate. And so now when you have the Fed raising rates, it's a perfect disaster. And here, let me just say this, and let me conclude with this. I mentioned this in a recent interview. Greenspan lowered the interest rate to about 1.5% in 2002 or 2003. And then he started raising it because the housing market and the markets became overheated. It got back up to 5.5%. And that was part of the reason why we had the crash in the markets. But there were a lot of other good reasons too, the subprime and et cetera, as well as more leverage. They're starting to raise the interest rates. They've raised it 1%. It was, I think, 0.25%, and now it's 1.4%. We're starting to see damage already just by increasing it 1%. There's so much debt now in the system, Elijah. By the Fed raising rates, it's causing so much, it's causing so much severe friction. It's going to really disintegrate the markets much quicker than we realize, and it's not taking much to do it.
Now, if we're going to see this energy crisis like you say we're going to see in the future, besides preparing financially, are there other ways that you think people should protect themselves?
Before I tell you that, let me just give you an idea, because you always have to go to the numbers. The Permian is the largest shale oil field or region in the United States. It's not all shale, but a lot of it's shale. It's producing about 3 million barrels a day. The other 3 shale fields, which is the Bakken, the Eagle Ford, and the Niobrara, are producing about 3.1. So the Permian is producing half of all the shale oil in the United States. Pioneer Resources is the largest operator in the Permian. And between 2015 and 2017, Elijah, they made $4.8 billion from operating cash. Unfortunately, they spent $6.3 billion producing that shale oil and gas. So they lost $1.5 billion. So how did they do that? Well, they sold assets and they raised $2.5 billion in issuing shares in 2016. So what we're seeing, even though the Permian is the last shale field that we're exploiting and supposed to be the most profitable, Pioneer, which is the biggest producer, is losing money. What happens when the oil price falls? See, it's a disaster. So people need to realize the U.S. shale oil industry is now in disintegration mode. It will pick up speed over the next several years. So when this happens, the best thing people can do is two pieces of advice. You have to, let's say, available wealth you have, that I would not keep it in paper assets. This is what I would do. I would not keep it in paper assets. I would make sure I have a lot of it in physical gold and silver. And then secondly, you got to learn how to do more things yourself. You have to learn how to grow more your own food. You have to learn how to do things to become more self-sufficient in your area. And so I think those are the 2 important things to do. And you don't have to do it tomorrow. You still have time. But as this energy production falls, the U.S. government is likely going to disintegrate. Unfortunately, that's what's going to happen. It's a done deal. So we can't rely on governments to solve our problems. We're going to have to solve our problems ourselves, or on a local basis. Work with local governments, and that's my biggest advice.
All right. Well, Steve St. Angelo, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where people can find you online? I know you're growing your YouTube channel, and that's a very good resource for people.
Yeah, thanks, Elijah. I put 2 or 3 articles a week out at the SRS Rock Report, and I focus on the precious metals, mining, the energy, as well as the economy. But I also started my YouTube channel at the beginning of the year and found out that doing videos, as you know, you can. It's easier to understand these principles of the energy return on investment, as well as how energy is going to impact things. And so it's easier to describe what's happening using charts and explaining it on a video. So if they want to check out my SRS Rocco YouTube, I usually put out about 1 or maybe 2 videos a week.
All right. Once again, thank you so much for your time, Steve.
And thank you, Elijah.